Joining us on today's episode of the Executive Exchange is none other than Charles Savage, the CEO of EasyEquities. Charles, good to have you in the firing line, and I want to start off with a relatively easy question, and that is that EasyEquities is long associated with democratizing investing. And I want you to unpack what that actually means to the man in the street or woman.
Yeah, look, I think fundamentally what it means is we make investing easy for everyone. And what are the friction points that we've identified that we've radically addressed that weren't available just a decade ago? Firstly is we changed the interface. We took lessons from people like Amazon and Uber, Facebook, Google, Netflix, and put an interface that was comfortable for retail to operate rather than the traditional, graphs and charts and red and green, etc. The second thing we did is we recognized that everyone starts their investment journey with a small amount of capital in something that they don't understand. And so we eliminated minimums, we fractionalized access to shares, and ensured that there were no excuses for taking up your first investment. And then I guess the third part was to recognize that investment opportunities persist all around the world. They're not just available here in South Africa. And if you're going to build a portfolio of investment opportunities, you need to have global access. And so we created a platform that allows a South African or anyone to get access to South Africa, the UK, US, and Europe, as well as alternative asset classes. So from crypto to listed equities, ETFs, unit trusts, and kind of everything in between. And those are for us, the fundamental foundations of democratization.
When it comes to users, what has been more difficult? So if you look at acquiring them, educating them, or keeping them engaged, where would you say has been the hardest aspect to maintain?
I think just reaching them, funny enough, we're just, if you think about how little we were a decade ago, we had no access, we had no brand, we had no distribution, and we had no balance sheet. And so reaching the customers was the hardest part. What they've surprised us is how smart they've been and how well they've managed their investments and how often they've pitched up and engaged and how much they continue to save and how they have radically increased their propensity to save as their income has grown. So for us, reaching the market was the hardest problem. And the approach we took was to say we're going to go it alone, but at the same time, we're going to build partnerships that give us distribution. And they've made an incredible job of allowing us to reach their customers, Capitec, Satrix, Telkom, and Discovery Bank. And so for us, that was the hardest part. How do we take this platform and reach the market where they are, where they find themselves?
What have been the hardest yards for you over the last decade as the boss of equities?
Look, raising capital in the South African context is tough. And the fact that we listed doesn't make it any easier. You would think because we're listed that, money flows to you, but it doesn't. And building a business in the public review whilst raising money has been exceptionally tough. So, typically businesses like ours who are only a decade old don't operate in the public space. They do things behind closed doors and their income statements are shrouded from review. We've got to stand up every 6 months and have public review of what we're doing. And when you're building a business, one, from the start, and two, as fast as we are, you're going to make mistakes all the time. And doing that in the public eye can sometimes be tough. I think it creates the right discipline, so I wouldn't change it. It creates the right discipline.
Well, I was going to say, am I hearing regret there? Are you
No.
saying you shouldn't have listed from the outset?
No. I mean, it's created the right disciplines for us. It's to build this business in the public review. Whilst it's not always welcome the criticism, it's always listened to and considered. And in the result, I think you build a much more resilient and a better business. And I fundamentally don't believe we would have built EasyEquities the way we have, or as successfully, if we didn't do it right in front of our customers, shareholders, and stakeholders.
How do you balance responsibility with growth? And of course, in the investing game, as you mentioned just a moment ago, you've got all of these new assets coming to market. That must be something that you often discuss around the boardroom table.
Yeah, firstly, you must build products that your customers need. I mean, that's the starting point. If they don't need them, don't build them. And and don't wonder what your customers need. Ask them what they need. So the starting point is to be responsible to build products that your customers need. And then the second thing, which is an analogy that Mark Barnes likes to use, is make sure if you're going to drive fast cars, you've got ABS brakes, which, and the same applies to our teams. They're trapeze artists, so make sure they've got nets underneath them so that when they fall, no one gets injured. And the same for your customers. We're moving fast. We're going to therefore break things as we move fast. Make sure you have the systems to make sure that no harm is done and that you can catch your trapeze artists when they're performing.
What mistake do you believe South African retail investors most often make?
They don't just start. They overcomplicate the starting point. They want to read the book. They want to read the rules. They want to understand everything before they move to action. And our experience with 11 years of hindsight is the minute you move to action, the education starts and accelerates through that action rather than overcomplicating and overthinking the starting point.
From a from a competitor standpoint, now that you are with that decade behind you, what are some of the hot digital investing platforms that you look to that are hot on your heels?
Yeah, look, the marketplace is so vibrant and there's so many competitors. But I'm going to miss a few, but the ones that I really focus on, globally, Robinhood, they set the pace. And they've set the cadence for the industry. And so and at some point they might turn their attention here. The second one for me is Revolut, and they're arriving. Whilst they started by building a bank through transactional services and then went into investing and then became a bank, they do parts of what we do. And so Revolut would be the second one that we watch really closely. And then finally, the one that I think is actually category winner, they've done the best job of it, is Nubank. And again, they're not here and they most likely won't pitch up here given their investment in Time Bank. But what they've built is an incredibly scalable business at a very low cost of acquisition, and built durable revenue across so many different product lines. So for me, those are the three that are really standouts. And as a highly competitive South African, we're not just looking to compete with them. We want to beat them in certain areas. And so we've got to, stay attentive and focused on where we think we can win, and stay highly competitive at the same time.
No discussion on investing is complete without talking about artificial intelligence today and how it's being used, one, within your business itself, and two, how retail investors are using. Do you have any insights?
Yeah, I mean, we're 2 years into our AI adoption kind of journey, and the starting point for us is to accelerate the pace of change within the organization. And, what that fundamentally means is how can we partner AI to be more productive? And we're doing that really well. Some test cases in code development, our developers are writing at the very high end 20 times more code than they were, or more productive code, not just lines of code, more productive code. So they're solving 20 times more problems than they would in a period of time, a week, a day, a month. But other areas are as simple as, responding to emails, automating customer engagement flows, or automating processes using AI. And then for our customers, we've got a product on the platform which is called AI Baskets, where you have you prompt an AI agent around investment themes that you're interested in, and it actually creates a global portfolio for you. And then you can edit that portfolio and invest in what you believe or the residual should be. That's a starting point, and a very immature starting point for where AI is going. Fundamentally, I think over the next decade, if you look back at the last decade, the winners were defined by those who had the best UI, UX. For me, the winners over the next decade will be those that plumb AI as the operating system for finance. And what I mean by that is money will be programmatically moved. On top of that layer, so will your investments, so will your advice, so will your asset management. And I don't think it's going to take more than a decade for us to let go of the UI UX we've become so comfortable with and transfer that relationship to an AI agent.
You talk about the early days for EasyEquities and the visibility in terms of being a listed company. How do you believe your leadership style has changed as the business has matured?
I think letting go of ego is, and what I mean by that is the arrogance to think that all of the strategies you need to deploy are inside your head, um, versus leaning into your customers' needs and wants and desires and deeply understanding those and then letting them drive your strategy. I think, I'm 52 now, so I think I'm on the wrong side of 50. But if I think about my younger years, all my ideas that I had, I believed would scale. They were brilliant. They should be executed. They deserved, the attention in the room. As I've got older, I've realized that 1 out of 10 of my ideas are half good. The other 9 are worth listening to our customers to fund.
Funny enough, that echoes the sentiments expressed by Stephen Kossoff when I chatted to him recently on the same program. When I asked him about the secret to success, he said, leave your ego at the door. So it definitely in line with one of the business greats in South Africa. Let's turn our attention to the markets. Right now, we've got a relatively volatile situation. South African equities have run very hard. Of course, they've got that underpin from a commodity perspective. How are you looking at the markets right now? And perhaps a little insight in terms of how you are treating your own portfolios.
Yeah, I mean, if you look on the surface at the indices, everything looks stable. Underneath, it's chaos. I mean, you've got the tech stocks that are either in bear market territory or approaching bear market territory, and down 20% plus from their highs. And then you've got defensives that have accelerated 14 to 20% in the last month or two. Some of them now trading at higher PEs than the tech stocks, and you kind of go like, what's going on? The market is signaling a disruption. It's signaling an event where where the indices should fall apart, but everything at the surface is staying together. And so, I think all it's saying is that the market doesn't know where to from here. And the AI revolution isn't fully bought into, it's not fully adopted. And so people are looking to diversify and hold more defensives. From a South African perspective, I think it's a different story. And I can't tell you how good it feels to be South African in this moment. Like I do feel like those who stayed, like you and I, there's a survivor's premium for having stayed. And I feel that same way about our market. The South African market still looks relatively cheap, full of opportunity. And the super cycle, the commodity super cycle, which for me is going to be enduring for well beyond the next decade, sets us up so well, whilst being supported by the policies, let's just call them the Trump policies, that for me have flattened the trust between, if you like, the first world and the emerging world. And that also is playing into our hands. So I think South African investment opportunities today are more durable, more identifiable, and more cyclical, and therefore easier for people to identify. And I do fundamentally think we're in for a super cycle and a super decade for SA Inc.
You haven't given me any insight into your own personal investment themes.
Yes.
Was that deliberate, Mr. Savage?
And Bronwyn, like what I do is not what our customers should do. 99.9% of my wealth is in one counter, and that's Purple Group. And, that's not, like, I'm not going to shift from that while I still wear the title of CEO.
What is the one thing that you wouldn't change about what you've done? Fundamentally, you wouldn't give any ground away on one key tenant over the last decade that has formed EasyEquities.
Yeah, that's a great question. And I've thought about it a lot. If you extracted one core ingredient, what would what would disrupt EasyEquities? And fundamentally, it was fractional shares. It was the realization that everyone starts a journey with small amounts of capital, whether you're young, old, rich, poor, educated or uneducated. We all start with small amounts of capital in small places. And so for me, without fractional shares, EasyEquities would never, ever have existed today.
What is the one piece of advice you would give people who look at the investing complex and say, it is just not for me, and it seems far too complicated to even get started?
Look, firstly, it's a life skill. You know, for me, the decision not to invest is the unintended consequence of that is a poor retirement, um, and less choice in the future. And so, for me, the it was and rightly was an intimidating landscape over a decade ago, but the ecosystem has improved radically. Access to information, access to AI, access to platforms, lower costs, passive investments. The whole ecosystem has got to the point where it is your duty. It's like you wouldn't go swimming, you wouldn't jump into the sea without having learned how to swim. I don't think you can have a successful life full of choice and full of things that you would want for yourself and your kids without investing. And so people just have to get started and start their education journey. And it never ends. You're never a complete investor. The journey keeps rewarding you, but at the same time keeps teaching you lessons for the next decade.
What is success for you beyond the traditional financial metrics?
That's something I've thought about a lot, I guess, because I'm 52 now. But 100 years from now, I would love the following conversation to happen, where somebody says, "How is it that South Africans are so wealthy?" And the answer, I would hope, includes the words easy equities. And for me, if that happens, then what we've done here, what I've done here, has been an incredible success.
I've got one last one, and I tested this out on Hendrik du Toit, the CEO of 91. I've often asked CEOs what keeps them up at night, but I want to reframe that and say what gets you up in the morning.
Changing people's lives through their investments every day. I mean, I think when work feels like going back to boarding school on a Sunday night, you're in the wrong job. When work feels like life and living, then I think you found your purpose and what you should be doing. And fundamentally, the thing that just gets me out of bed is to reach more people wherever they might be and to make small but significant and incremental changes in the way they approach investing.
I thought that was my last question, but then I realized I have to ask you what the next decade holds in terms of growth for EasyEquities. And I'm sure you've given that a lot of thought.
Yeah, it's so easy to look back and say that we've achieved a lot, um, considering the landscape that we found ourselves in. I mean, just to contextualize it, 10 years ago, there were 250,000 investors in South Africa total. Today, EasyEquities has 1.2 million investors. And so you could say we've achieved a lot. But the other side of that coin, we're so early. We're only a decade old. We haven't even entered our teenage years. And so the next decades, and it's not just about that, are far greater than the last. And if I look for comparisons in the market where I guess people didn't believe in what those companies could achieve, I find two parallels that I think EasyEquities is replicating. The first is what Investec did 30 years ago. They built an incredible investment bank by offering credit to graduates. That's fundamentally what we do, what they did. What we do is offer investments to South Africans, graduates, if you like. And I think that compounds better in the outcome for everyone, the country and the individuals. And the other business that I reflect on is Capitec. I just finished reading the book, and only 2.5 decades old. And if you compare where we are in our journey a decade in versus where they were a decade in, we're not that far apart. And so it's not impossible for me to believe, in fact, I do believe, that we can achieve the same outcomes that they have over the next decade as a half. And as a strong partner of ours, potentially they've made that easier by putting us on their banking rails in front of their customers.
So, Charles, I feel inspired to tackle the rest of my day, and I'm sure many of our viewers will feel the same. Thank you so much for joining us. Charles Savage is the CEO of EasyEquities, and you're watching The Executive Exchange on Moneyweb TV.